Hey, what's going on, everybody? Christopher Inks, TexasWest Capital. Got my friends, the other gentlemen, the other beards, Tillman and Andrew here. Andrew's a little under the weather today. He let us know, and Tillman let us know that he's...
I was researching because Andrew wanted to know. Yeah, Andrew wants to know where the origins of under the weather came from. Yeah. Shockingly, it's pretty interesting. Okay. Under the weather is actually comes from under the weather bow, which was the position on a ship that you had to, the guy had to stand under the bow and look for stuff to make sure the ship didn't hit it. And you were on the front of the ship, so you were literally getting hit with all the weather. So under the weather bow. Yeah.
Oh, well,
interesting. Yeah, I guess that would suck to be in that position, and when you're not feeling well, that kind of sucks. So yeah. It seems to fit. There y'all, everybody watching.
I don't know. That assumes that Andrew's being useful during this time period, and that I just said it assumes that. I didn't say it one way or another what was happening here. I'm just saying, it does assume that he was on post right now, and I think he has pajama bottoms on, if I had to guess, underneath. I think this is the KOL. He has a KOL closet and then an Andrew closet.
Is there a meaningful difference? Is there a meaningful difference between pajama bottoms and sweats? Is there? I mean, I'm not sure.
And I was going to say, why do we assume today that he's got pajama and not any other day? I mean, come on, guys. We know how Zoom and all these things work.
No, he's a GQ guy. He always has his outfit planned out the night before, and he's
Tillman knows that I have my outfit planned out the month before because it's always the same. A topic an often well had topic of discussion between Tillman and I.
Andrew is dressed for a funeral every single day. So he's ready to go. He's anytime he needs to roll.
Hey, listen, I don't have to wonder if we're going to go to the Gemini, Christmas thing that they do. What am I going to wear? I already know what I'm going to wear. I mean,
doesn't having just wearing basically the same thing and having already figured out, doesn't it shave off all that time that you can use to just build the business?
Very simple. Makes it very simple. That's true.
The Dumb and Dumber outfits. I thought that's what the plan was. We were going to wear this.
Dumb and Dumber. That would work because there's a Bitcoin element to one of those outfits. It's all orange.
That's right.
I do take it to another level.
Orange iPhone. Bitcoin orange.
Yeah.
Well, that's actually brings me to a sad point that I wanted to bring up today is this recent dip has shaken me out of the market. I think I'm done with crypto.
After 10 years and everything that's happened, this was the thing that did this 30% pullback.
Yeah. Well, you guys promised that once we got to 100,000, we'd never breach it again. So you guys are liars, and I'd have to move on to something else.
The thesis is dead. Don't say you guys.
Listen, the thesis is dead. Have you seen? Listen, Fred Krueger's power law has been broken, so we can just all go home. Okay, there's nothing left to talk about. It's over, isn't it? I mean,
so what does that mean? We all get into AI infrastructure.
Well, I think a master plumber. I don't know what I'm going to do yet. It's going to be interesting to see the evolution of Tillman.
He's gonna, what he's going to do? He's going to be a pavement guy. He's going to pave driveways in the valley and make millions upon millions of dollars.
Well, there's a lot of money to be made. And I like the smell of asphalt in the morning. So it's just like make sure you. That was a reference to like the smell of napalm in the morning.
That's right. That's right. It's a decent enough movie. It's a decent.
You didn't have to explain it.
I mean, of all the people that I thought would register on the movie Richter meter, I thought you would, and you didn't even give me one. Like you just left that awkward pause. No one even knew what the reference was. I appreciate that. Thank you.
Well, it's the
co-host Andrew Parrish.
It's the delivery. It's the delivery that's lacking. see what I mean? It's the delivery that needs a little work.
My delivery.
It's the delivery that needs a little
All
work.
right. Hey, guys, listen. So now that we've gotten that all out of the way, I don't know what that all was right there, but hey, you're welcome.
I love it when Chris tries to pull the show back to actually being a show.
Okay, guys, let's be adults
something.
and talk about funny money in the internet that doesn't exist other than what we say exists. I mean, come on,
that's right,
Chris.
that's right. It all exists because we think it exists, right? That's what it is.
That's one way to look at it. Yeah.
But hey, listen, the big news right now, I don't know if our viewers have actually seen this, but Basel Committee is looking to rework the crypto rules. So basically, the way it kind of comes out here is there was a article, Financial Times article recently, and so Basel Committee Chair Eric Thin's statement in that, right, was calling for revisions to that 2021 crypto capital rules, which actually imposed this 1,250% risk weighting on volatile assets like Bitcoin, right? And so, I mean, that effectively deters all that bank involvement, right? Because what does 1,250% mean? Well, banks have to keep extra money aside, as a safety cushion to cover all that potential losses from risky investments and stuff like that. So super volatile cryptos like Bitcoin, those global rules from 2021 say they have to treat them extremely risky. And so that multiplies the investment amount by 12.5 times when you calculate that cushion, which means that if a bank holds $100 worth of Bitcoin, it needs to set aside at least $100 of its own money just to
What's the new number?
Well, no, that's the thing, right? Is this idea that it would have to be this 1,250%. That was the 2021 rules, because it was kind of interesting because that's the time.
So they haven't told us what their new number is.
Right. The call here is he's saying, listen, this is ridiculous. This doesn't make any sense. It's keeping the banks out of it. He's like, listen, we need to go ahead and change these rules so we get that off that 1,250%. Okay. So now you got U.S. Federal Reserve Vice Chair Michelle Bowman, who labeled those same rules, right, back in 2023, and UK declined adoption, right? And since then, of course, the stablecoin market growth is like 300 billion now, right? So you've got this strong move with the stablecoins coming in now after all this stuff has been done. So what does that mean? That means if Basel goes back here and they rework these rules, they can unlock
Banks can hold
literally
a bunch
trillions. Yeah, this is per industry estimates, right? We're talking trillions in tokenized assets for banks. And what does that mean? Well, if you're in crypto, which means if you're in Bitcoin, right, this whole thing, that means all of a sudden you have a lot more potential money that can actually flow into Bitcoin, and banks can hold. And, it becomes this really, like, I think one of y'all said it earlier, right, before we went online, it says the final boss of all this, right? Because we've been so focused on U.S. Government kind of coming in there and their rules and everything. But, man, Basel's it, right?
Basel III standards that is what the entire globe of banking is. That for all intents and purposes, they have to adhere to. Those are the standards that everything starts with. So if there's an adjustment associated with, I'm not at all surprised about this, to be frank. It was just a matter of time. We've talked about this, irrespective of Basel and adjustments there. It's just now coming and getting to that point. Literally the second that BlackRock put in their application to have a Bitcoin ETF, this type of stuff.
It's predestined.
This was going to happen. So you're going to have a world where first, Bitcoin ETFs will serve as meaningful collateral for securitized, security-based loans, associated with your brokerage account. And then at some point, because, most approvals have already happened associated with banks being able to hold Bitcoin and Ethereum at minimum as, custody. They can custody it at whatever bank they want to. Once that begins to happen at scale, now those, the spot version of Bitcoin, your Bitcoin you have in your cold storage wallet, holding it at a bank in some way, shape, or form from a custody standpoint, you're going to be able to get loans based off of it.
Well, loans, and it'd be covered by insurance, and like all the stuff that
fantastic things.
Oh man, I would do it in a heartbeat. I don't care. The sovereignty thing, I'm over it. That was 2015 for me. It's
You were the
now.
sovereignty family 10 years ago.
Well, here. Let me ask you this, and here would be my thing to all the Bitcoiners out there. Have we ever been invited to the tables that we're being invited to now?
Right.
No, of course not. We've been shunned from those tables.
Well, why wouldn't we welcome the invitation? Go and be pleasant guests. Teach them what we know. Help integrate and collaborate. Yeah, it's foolish to me.
The man, right?
Let's talk about sovereignty for a minute. Like, what do people of in the worlds of significant capital? Let's call it the ultra high net worth world, where you're at 25 million or above, right? So those types of folks, theoretically, they have 3 or 4 or 5 brokerage accounts. They work with 3 or 4 banks. They also probably somewhere in their house have a safe of, it's not a little box. It's probably a room that's a safe that has other stuff in it that's valuable, right? And then they have other assets, whether it's multiple homes, yada, yada, yada. So when it comes to just Bitcoin as sovereignty, it's going to be chopped up into 3 or 4 blocks, right? You're going to hold maybe a quarter of it still on your cold storage wallet, just in case the world gets populated by zombies, and that's the only way we transact forever.
Well, you're going to hold that as a cash equivalent, right?
Yeah,
because that's what like how much do you feel comfortable holding cash in your house? Not that much, unless you got a safe or a vault room or something like that. You know what I mean? So, it's going to be something similar to that, I would think.
Well, so and then you've got some that's held, a spot version is held on Coinbase. And then you've got some in IBIT or BitB or for the Fidelity version. And then you have some that's actually, also connected to a meaningful loan that you've taken out on a little bit of your quote unquote Bitcoin assets. That's what it's going to look like for an ultra high net worth investor that's got 5% to 10% of their assets in quote unquote Bitcoin. It's, TV shows are not TV shows, movies are not TV shows, whatever it happens to be, there is some truth to some of that stuff. I hearken back to like the show Billions, right? When there was a moment or two where Axe is like, I'm in real trouble here, I got to get out of the country, right? What did they do? Him and his wife, they went to the vault in their house, and they've got, stacks and stacks and stacks of like gold bars and coins and some other things that are sitting in that vault, right? Like, that's not a meaningful portion of his made up, amounts of money on the TV show, but it is representative of what that looks like at higher levels of quote unquote capital in society. That's what Bitcoin will look like. We can talk about who's selling and who's moving. Everybody wants to blame the current downtrend on OGs or selling out their big stacks, and that's just what they're doing. That's absolutely not all of it, right? There's a bunch of different things going on here where I looked up the price of BlackRock's IBIT when it effectively came to market. It was like $20, right? So if you've been 18 months and basically a month ago it was at 62 or 63, you've effectively 3x'd your money, man. So you're like, well, maybe I trim that position a little bit and then I get back in it after the first of the year. Tillman always has a story about tax something or other that's going on.
Well, it's worse than that, in my opinion. I think that the paper is now the dog and not the tail. What do I mean by that? I mean that like people can bet fake Bitcoin,
Sure.
right? Leverage positions 100 to 1x. There's no Bitcoin that they're not putting 100 Bitcoin as collateral against, it's paper, it's fake, it's credit. And so what happens is that you know, from this gap, from this liquidity area in price to this liquidity area in price, we may be caught in no man's land, and people may start stacking bets, paper bets at one of these liquidity zones, disproportionate to the other. If like, let's just say you're below the 100,000 mark. Remember before we had crossed the 100,000 Bitcoin, there was a huge liquidity zone at 100 grand, and they were all sellers. Just massive amounts of sellers at 100 grand. So it just kept bumping its head, bumping its head, bumping its head, broke through, fake out, bump its head, bump it. Like those are massive liquidity areas that, you know, you can't, if they're spot, they are deep and they're hard to get through. 100 grand was one of those. The liquidity zones that we're dealing with now are fake liquidity zones. They're paper liquidity zones. How do I know that? Well, in the last dip that triggered this huge spiral down from 126 to where we are now, there was $18 billion of 100x long trades that got liquidated at 126 or at 124 or 123, 120. It just causes this spiral effect where all of the market makers, it's a heyday. Why? Because when you take a leverage bet in the market, there isn't other people that equate to the counterparty risk of that bet, right? No different than when you bet on Vegas. If I take a parlay bet, right, and I go, these 10 teams have to win by this margin, and I'm going to make $2 million on a $10 bet if that happens. There's no guy on the other side that's made the exact same parlay, but exactly the opposite that's placing that bet. Who's taking the counterparty risk?
Vegas.
The house. Vegas is taking the counterparty risk. They have a vested interest in me not hitting that parlay. Well, guess what happens when I take a high leverage trade in the markets? The market makers, i.e. the exchanges, the people who are taking that, me as a credit customer and extending that credit, now have a vested interest in me not hitting those targets. When that builds to equal $18 billion of cheese, the price doesn't even matter. The price of Bitcoin isn't even relative. It's just about triggering those liquidity events and spiraling that down. Why? Because everybody on the other side of it makes a gobs of money because we're retail greedy.
And what does Vegas do in the midst of that parlay? When you hit 3 of the first 10, they call you and say, "Hey, we'll give you a deal. You want to?
We'll buy you out of the risk because they don't want the
risk."
When
you hit 5, the deal gets sweeter. When you hit 7, it gets really sweet, right? So yeah, it's the other thing too about leverage, quote unquote, washouts. There will be a moment when there's leverage turnups, right?
Yep.
So there will be a moment where Bitcoin will move parabolic to the upside, in a quote unquote gamma squeeze the other direction. Are you going to be around when that happens? That's the question, right? So all these levers and pulleys can move both ways. It's just that, let's just call it people that have been involved in crypto Twitter are used to cycles. They're used to this cycle. Well, how is this? It's not a cycle, but this is a cycle. This year was supposed to be the big year for the cycle. And what about, what's going to happen next year? Because that's usually the down year in the cycle. Like, forget about all of that. The landscape has just completely changed. So in the first 2 years of the cycle, Bitcoin in 2023 was up 155%. In 2024, 123 or 24%, right? So we're down, 5% right now for this year. I don't know. That's pretty good. That's not bad. I mean, that equates to, let's call it, almost like 90% per year over the last 3 years. Not bad.
Well,
not bad at all.
Give credit where credit's due. And I'm going to go back to some of my early years in Bitcoin and something that I heard from David Bailey in Nashville at some Bitcoin meetup thing that we were doing, that he was doing rather. I was a Bitcoin miner at the time. It was like 2015 or 16. And he said something that changed the way I looked at Bitcoin. And I've never gotten off of it, which is when Bitcoin's cheap, I focus all my efforts on making cash to buy the cheap Bitcoin. And then when Bitcoin's really expensive, I lighten the load so I can buy more Bitcoin when it gets cheap again. And it was just that simple. And it was his motto was, when Bitcoin's dipping, when it goes through these bear cycles where everybody hates it, that's when you start focusing on the real world and going, what jobs can I do on the side so I can buy more Bitcoin? Because guess what? Unless you believe Bitcoin's gonna die before the next bull run, if you accumulate in the bear cycle, you stand to make disproportionate asymmetric returns, right? It's just that simple. So you're making a bet by piling up your free cash when Bitcoin's cheap and falling in price. You're betting that I'm betting on every purchase I make, whether it was at 120 or 115 or 106 or 101 or 95. I'm betting that this isn't the final stop on the railroad track. And guess what? I'm betting that the final stop on the railroad track is at least a 6x from here. And if it just catches gold, it's a 15x from here. That sounds like a pretty juicy piece of steak to me. I don't know where else I could diversify cash into something that's immediately, potable. I can take it anywhere I want, anytime I want. All of the emergency fund type characteristics that you described earlier. I can do all of that just like cash, but it has growth potential that cash, like compared to cash, it's a joke. I mean, it's literally what is cash worth? -5% a year.
Yeah. It's a we talk about dips like crazy on this show and how there's never been a dip with Bitcoin that wasn't worth buying, right? And you can even go back to cycle highs, right? So the 2017 high was, like 19 and change, or let's call it 20, right? If you bought at the absolute high there and you held till now, you're a fairly happy person. Same thing with the cycle highs in 2021, 69K. Again, fairly happy person where you're at today. The other thing too is, I assume at some point we'll talk about, IBIT / Bitcoin ETF outflows. Those need to be put into context as well. So IBIT had its biggest outflow day in a long time, 500 million, let's call it. But context, right? So right now, I think there's 72 or 73 billion in IBIT's coffers of Bitcoin. But the truth of the matter is that if we were 120, that number would actually be right around $100 billion. So for all intents and purposes, a $500 million outflow day is less than one. It's 0.5%, right? It's half of a percent of the totality of what's held in IBIT as an outflow day. Again, that's nothing. In fact, you could make the case that we're talking about some retail outflow and then also some outflow associated with players that are using it as a leverage point or a trade, right? So there's the Renaissance techs of the world that are holding IBIT for a day and a half or half of a day. You just don't know what that position happens to look like.
Or till the end of the year,
yeah,
when they are planning their taxes. And
whatever
listen, let me tell you something about Bitcoin that is awesome that a lot of people don't know. Wash sale trades are illegal for securities. You cannot sell NVIDIA and take a loss on your taxes and then buy NVIDIA 5 minutes later and reestablish your cost basis at the new point. That's called a wash sale. And the IRS says you can't do that on securities. Well, guess what? You can do it on cryptos. And so at the end of the year, if you're down on your position, if you're not, I'm not a tax consultant. Please consult a tax, attorney, CPA, all that junk. I don't know squat.
Not tax advice.
But this is a good topic of conversation you could bring up with them, which is, hey, I'm down on some of my crypto this year. I know that the end of the year is coming up. Should I take a loss on it? and then see what they say, talk to them about it, because there's unique rules around crypto that there are not around every other thing that you own that you're down on, that can be to your advantage, right? So not tax advice.
Yeah.
Yeah. The outflow story to me is, it's as disinteresting as whatever the inflows are. BlackRock is an absolute behemoth. Their sales team, their management team, they're going to continue to push, allocate. And again, 2 days ago, right, we hear that Harvard has significantly increased its position in IBIT, right? So, we can talk all we want about price action and price action to the downside and whatever the sentiment happens to be in our little, crypto Twitter bubble. But the truth of the matter is that when it comes to massive institutions that do their business with BlackRock, they're increasing their allocation to Bitcoin. That's what matters. And if for some reason you as a trader, you as a Bitcoin KOL on crypto Twitter think you're smarter than the people making decisions at BlackRock / Harvard and their endowment, I don't know what else to
well
tell you.
Let's bring up our call that we had yesterday without naming names. We were on a call with a customer of ours, and very, very intelligent, seasoned guy, owns a family office, lives in Dubai, lives all over the world. And he said something that probably is indicative of every person at that level. He said these words: I'm incredibly long Bitcoin, but over the next 90 days, I'm incredibly short Bitcoin. So he's accumulating on one side of the token. He's just going berserk in terms of buying Bitcoin, dollar cost averaging in. Why? Because that's his long-term holding stack that they're accumulating. That they have to do that because it's such a large amount of Bitcoin they want to accumulate. You're left to nothing but doing it in small increments over long periods of time. So that's one side. But then the other side is well, guess what? There's money to be made in the short term because we think there's still, some downside to be had. And here's my point to everybody that's retail. If you're only playing one side of the coin, don't take advice from people who are trading both sides of the coin. It's a completely different strategy. Like, you trading one side of the coin is you trying to literally pick the bottoms, buy, sell the tops, sell, buy the bottoms, sell the tops. Like, that is magic. No one can do that. That is literally impossible to do. The richest people, when you hear them saying things that sound like that, what they're really doing is they're making short-term bets, intermediate-term bets, and long-term bets. And guess what? They can take losses in the short term and be fine. They can take losses in the intermittent. They can take losses in any one of those categories. And they like to play counter trends across those time periods because it's a way to diversify and reduce their exposure when they need to, right? So if I'm long Bitcoin and I got 25,000 Bitcoin, like the guy on CNBC getting interviewed today,
bullish CEO.
Yeah, the bullish CEO. He goes, I got 25,000 Bitcoin, 25,000 Bitcoin. Well, guess what? When Bitcoin's crashing, probably smart to hedge a little bit of that 25,000. Even though you're not going to sell it, it's never leaving your balance sheet. You're going to keep it forever. You're sitting on $1 billion of IPO money. Probably should take a little hedge, like those bets that we were talking about earlier. If you're 5 deep in a parlay, you might take some off the table if you need that cash, right?
Yeah, I mean, that would be the intelligent way to do it, right? But we're talking about, the average market participant, retail market participant, who doesn't tend to think beyond, the nose in front of their face, right? That's human beings, and in doing something they really don't know what they're doing. Everything's knee jerk, everything's emotional, everything's now, right?
It's a good way to find yourself chasing the market where you're losing every move you make. I've been there. I've felt that, like where I'm like going, the world
We've
hates
all
me.
been there, yeah.
Why does every time I do anything, it go south right when I do it? Well, it's because I'm listening and then reacting, right? You can't do that. You got to have to get ahead of the market. You've got to think critically about what no one notices right now, but they're going to be forced to notice later. And that's where you make a
Well,
bunch of money.
a perfect example of what Tillman just communicated, right? It's what Jim Chanos did with MicroStrategy and Bitcoin, right? So long Bitcoin, short MicroStrategy, right? But even Jim Chanos, who's probably one of the 10 to 15 best investors on the planet and has been for 25 years, did he get out of the short MicroStrategy trade a little bit too soon?
Probably.
Well, he probably did, because it's lower than when he sold it. But at the same time, though, he made a significant return on that. And oh, by the way, his long position in Bitcoin isn't where it was when he got out of that trade too, right? So point being is that you have to have satisfactory outcomes that satisfy you, not everybody else, right?
Yeah.
You have to stick to those satisfactory outcomes. But point being, though, is that even a guy like Jim Chanos, he doesn't nail perfection every time, right? Theoretically, he wants to do X and he's going to end up with Y, and he can't spend a lot of time on, well, if I'd have done Z, I'd have had 7% more. No, forgot it. He just forgets it, moves on.
Yeah.
That's why.
Well, it's like what you said about Jim Cramer, which I love and I think about all the time since you mentioned it, which is there were years and correct me if I'm wrong here, in his book, he says there were years when he was managing the fund where in October they had hit all their numbers for the year. And he literally said, guys, you have to come to work in case the crap hits the fan, but you're going to be playing ping pong and foosball for the next 3 months because we're not trading. We're done for the year. Well, that is a great lesson in trading right there, because if you're done if you've made your number where all your investors are happy, you've paid all your employees, you've taken fat bonuses off the table, why risk that? And why not just check out for 3 months and start back in January and have the goal of doing that same thing next year where you're done every third quarter with your numbers? I mean, that would be the goal, because man, that's a peaceable lifestyle. You're getting rich. Everybody's getting rich. You're the hero and everybody is looking to you as that. Whereas if you put that at stake in those last 3 months and you lose that, everyone goes, you're an idiot. Why'd you blow it in the fourth quarter? Well,
Well, it's I haven't looked in the last couple of days, but I think year to date the S&P's up like 16% or something, whatever the number is, or maybe that's the NASDAQ. I don't know which one I looked at last. And so if you're a fund like Kramer's and you're up 21% and it's October 26th, right? You just cut it off, right? You beat the average that you are held to account by the better part of 40%, right? So you're going to splash that all over, institutional investors and high net worth and, ultra high net worth investors that are going to allocate to your fund in the following first and second quarter of the year and bring in huge amounts of dollars. So you're not going to risk because, well, you know what? NVIDIA is going to announce their quarter later today. And boy, if we really nail that, we can get to 27%. No, you just don't do that. And if you do that, then what ends up happening is you have a hedge fund for 3.5 years, and then everybody pulls their money and you're liquidated and you're not a hedge fund manager anymore.
Yeah. I mean, it would be the equivalent of like, you've got a star quarterback or a star running back that, you've got in the game and you're up 62-7 and you're about to head into the playoffs. You don't keep those guys in the game. You pull them. They're too valuable. You can't afford to have them hurt.
Yeah. So now that we've got all this going on, what do you guys think about Burry, man? So he, he's been shorting for years, finally gives up, closes the fund.
That's a classic example of how few true, unique investors and being able to catch generational trades that then land them in books or writing books or can fill a room to listen to their thoughts. There's so few of those people out there. In other words, if you think you're a retail person that can teach themselves how to do all these things, it's very, very difficult. It's so difficult.
Yeah.
So Burry, again, generational trade associated with, and by the way, he was wrong about that trade for nearly 2 years because he started taking
probably almost 100
in late 2005, and his investors almost darn near murdered him. Right. So it's a a generational trade, but he's had a very, very difficult time pulling that off again. It's the reason why, I look at the whole Jim Chanos thing. And again, his master Bitcoin thing, it's not something that he's made $7 billion on or whatever. Great trade, theoretically a great trade. To watch people argue with him in the Bitcoin world, especially people that, there's a world, there was a MicroStrategy is the greatest thing in the history of mankind that existed for a while on crypto Twitter. And people were MicroStrategy fanboys. And they would argue with Jim about all this stuff. And I'm like, what are you, a guy with a frog in his avatar and name, user 467, bye, I love NSYNC is arguing with this guy about, investment theses. And I'm thinking, this is nuts, right? And again, he pulls off another, meaningful trade. It is just, you bringing up Barry is a really, really good example of it's difficult because you get in your own head and you think to yourself, hey, I've got it figured out, right? So I've got it figured out. Then whenever I sniff a bubble, I should, this is Barry, I should go short. And because I'm Michael Barry, I'm going to win that trade. And he's gotten his teeth kicked in like 9 of the last 10 times. So it's human behavior. Human behavior even finds itself to the quote unquote geniuses of
well, some would argue that as soon as I think fame is what's killing those people, truthfully. Why? It's the same thing that, we saw with that James Wynn character. When you're making that type of money in private and not publishing your strategies and how you're doing it, you can ride that, wave for a pretty long time. But when you start telling the world what you're doing to make those disproportionate returns, you've just sealed your own fate, in my opinion, because that takes away your advantage and it gives people a way to war against you for your money. There's a lot of people out there that realize at a very deep level that the markets are a zero-sum game. That means every time somebody makes $1, they're taking it out of the pocket of somebody else. Okay. There's no new money getting injected into the markets. All those dollars have owners. And when I win, it's because somebody else lost. And, there's people that are very good at getting people liquidated. And when you start trying to make a lot of money on leverage and then publishing how smart you are, good luck. I really do think that's like playing in traffic from a trader's perspective. It's not the way to stay on a good trade.
Well, there has been a prime example of this, and it's because it's gotten worse in society with the social media and the scale of social media. So just in the world of crypto Twitter, there has been over the last 9 months this gold rush associated with digital asset treasury companies. And so people that, had reputations of some sort were sort of grafted into this movement. And, for one reason or another, most of those decisions to decide to sign on to some of this stuff looking like not the best idea in the world, right? Just not, maybe if you'd avoided it, you'd have a different path, or you wouldn't have to be answering questions literally every day. Why did you join such and such company? It's down 74% since you made this post, right? So point being is, yeah, fame and just additional eyeballs, or heaven forbid, a certain amount of followers, it clouds how
It
you
makes you do stupid stuff.
yeah, yeah, that's the right way to say it. Like, it makes you join.
Your own BS.
Yeah, it makes you join a, the 7th version of a Bitcoin treasury company that is just not is just a copycat of the previous 6, and it makes for a difficult. You gotta shift and move to potentially reclaim some of the value that you may have lost by doing that. So again, point being is it clouds your judgment in a certain way. And so,
well, and it's big checks come with big expectations, right?
Sure.
You raise $700 million.
Yeah.
You better need a plan other than a rebranding of a zombie publicly traded. You know what I mean? Like, there better be some really good stake behind that sizzle, or people are gonna go, you're all sizzle, no steak, right? I'm not. If and the only reason why you would want to buy a treasury company, this is the truth, is you think they can buy Bitcoin at a rate faster than you can buy it on a proportionate dollar for dollar contribution perspective. So if I buy $1 in the share of this, I'm getting a multiplier of Bitcoin that I could buy versus the dollar placing it into Bitcoin directly. That would assume that all of them that's only applicable when they're trading at a negative MNAV, which they all are now. But before, they were trading at like a 3-4x MNAV, like 4 times the net asset value that they had. The only way that would be justified is that if they had a business that was generating a ton of cash to buy more Bitcoin in the future, and they were guaranteeing the cash being dedicated to those purposes. So, none of them can do that because they're all zombie companies. So they're relegated to raising debt capital, which people don't like to give you when your collateral is crashing in value.
Well, yeah, people are not going to loan you more money when that collateral has gone from $33 to 55 cents.
Correct.
I mean, that's a tough space to be in, but you've chosen to take on that challenge, right? You've chosen to go do that. And by the way, it's even worse than you've given up some of your, let's just call it, societal value on the social media side, because now the flip side to the social media stuff is people feel like they're incentivized to take the opposite position of you to try and grab some of your social quote unquote value and, let's call it, steal it away from you by nailing you with, you made a dumb decision, right? So you got to be
vicious cycle.
Yeah, you got to be pretty careful. And if you're going to make some big decisions, like it happened with the whole treasury movement, it's just got to be. By the way, kudos to a guy like Scott Melker, who didn't jump into the fray. That guy got offered 9 million different versions of being involved in a treasury company, and he knew even at the Bitcoin conference. This was 6 months ago. He's like, dude, this feels like a bubble. I don't think I'm gonna get involved in this. And he did.
Well, it's great for Wall Street guys who want to trade paper, but I think at the core, Scott's a Bitcoiner, right? And that's what kept him out of it. Is like, if I want to buy Bitcoin, first of all, not going to buy it on leverage, and second of all, want to own spot Bitcoin, and that's the opposite of the treasury companies, right? That's literally, you're buying all debt and it's all paper. It's the literal opposite of Bitcoin. So, it is what it is. People want to make money. I think it's more indicative of the culture that we have today and how everybody just wants to get rich. I honestly think that. I think that if Beanie Babies started to show signs of promise people would be killing each other in Target for, you know, their third spot in line.
I mean, listen, we've got, you know, again, we've got members of crypto Twitter, the Choose Rich guy. He walks around with a Labubu around his neck. I mean, so whether it's Beanie Babies or whether it's Labubus, the answer to that is yes. Like, yeah, people would go nuts for that stuff.
Listen, I have a Charizard, original Charizard. I'm thinking about selling to buy a couple of houses.
Yeah, it's I mean, it's just, you've got to be, decision making is a skill in and of itself. Not that I'm the paragon of decision making in my own life over periods of time, but and I've learned to understand that, you know, meaningful thought has to go into how you carry out certain decisions, and what, you know, laws of unintended consequences.
Well, I don't think people even repeat that again. You know,
yeah, the law of unintended consequences. You know, you may have the best laid plans in the world, and if your thesis goes in a direction that you weren't ready for, what do you know, how do you handle that, right? How have you risk gamed that particular version of things out? You know, I harken back to I forget what the guy's name was. He was, you know, Secretary of Defense at one point in the Bush administration, and he kind of coined the phrase of there are known knowns, there are known unknowns, and then there are unknown unknowns. Right? And life carries a certain amount of unknown unknowns.
Yeah.
And so, you know, if we were to go back 6 to 9 months, I think we'd have, you know, 95% fewer treasury companies, right? Like I saw another headline where some well-known folks, I don't need to keep names out of it. The Winklevoss twins have invested in a treasury company for Zcash. Like, I look at that and I say to myself, okay, I guess that's a version of buying a pack of cards and seeing if a Charizard shows up. There's a chance that it happens, but
I think there's a deeper meaning there. The whole Zcash thing is about
I get it with the whole, I get it with
OG
the
stuff,
privacy and all that stuff. I get it, but
well, no, it's just the crypto. There's a huge section of Bitcoin coders that have left Bitcoin.
Yeah,
that's the truth. Like, there's a huge argument between, and we've touched on it on the shows in the past, but between, you know, core development and knots. And
my point though is that you can have that thought and debate, and you can just buy a big bag of spot Zcash.
You could, yeah.
100%. Or you could invest in a digital asset treasury company that's buying. I mean, that doesn't make any sense.
Doesn't make any sense.
So that's again,
well, especially when you can peer into the future and see so easily that in the next 6 months, every single crypto exchange, every single one, for every coin that you can imagine, you'll be able to click generate yield or loan money or borrow money, or a full suite of banking services for every coin that you want. And I know that because even stupid little coins that are very down on the list, number 100 on the crypto list, they're getting integrated at an exchange level for DeFi lending and banking services. Why? Well, because you're making it that much more simple for the customer. Now the customer, if I want to use my token to go stake it somewhere and make money, I don't have to know how to stake. I just literally go onto my current exchange like Coinbase. Coinbase has this right now. Coinbase allowed their Coinbase One users to participate in an ICO that launched yesterday. It's crazy how they've thought through some of these rules. So if you're a Coinbase One customer, you can buy up to 5x what anyone else can buy. And it says in there, you can sell it anytime you want. But we're monitoring each wallet that's bought. And the sooner you sell it from when you bought it, the less we're going to offer you of the next one.
Yeah.
So they're literally going to reward your IPO or ICO invitational status based upon how much free capital you're parking in these projects. That is next level broker stuff, man. That is like insane. No other place on the planet offers that type of access to everyone. And so you then take it to, you go, okay, well then every exchange is going to eventually do that. I would think that. Well, you then go to like exchanges like Uphold. They're all XRP people. Uphold was the only exchange that didn't delist XRP that was for US citizens when the SEC sued Ripple. Uphold, I think they announced very recently they're integrating with Flare to where if you have XRP, you can just inside your Uphold account and click and say, I want to generate yield. Now you don't even have to mess with these secondary protocols or these other layer ones. It's all going to be offered as banking services straight from the exchanges themselves. Why would you? I mean, that's going to be a hell of a competing market to the centralized exchanges and the centralized banking structure, because they're not apt to offer that right now. It's going to be something that they can't compete with.
Yeah, exactly. I want to kind of touch on this. Fibo here was asking, which I think is a great thing, if you're really paying attention to markets and global finance. But he mentions, hey, if the yen carry trade was the engine of global liquidity for 30 years, which it was, then who becomes the forced seller in the unwind? And what does that mean for Bitcoin as collateral when the leverage starts breaking? And I think that's a great point because, at the end of the day, when you've got that huge carry trade, right? That's been going on, like you said, for 3 decades here. And now you've got Bitcoin, right? Because the forced sellers, they're going to sell whatever they can sell. We talked about this lots of times, right? There's 2 types of sellers. You've got your person who chooses to sell, and you get your person or your company or whatever, your institution that's forced to sell, right? And so you're going to get those that are forced to sell. And those that are forced to sell are going to sell whatever they can sell, not what they want to, right? And we start thinking about, so what's what is like the real kind of, what do I want to say here? What can clear like instantly, globally? What don't you have to worry about? Clearinghouse bottlenecks, stuff like that, right? We're talking about Bitcoin, and so I think in that situation, I think Bitcoin, especially if the leverage is really thick, right? I think Bitcoin gets sold off pretty hard. But the good thing about it is I think it really starts looking like gold back in the early 70s, right? So you get the clear off there, right? Because they need that USD liquidity. And Bitcoin, if they're holding Bitcoin, that's going to be the quickest, easiest way to get it. So Bitcoin is going to puke up faster in that kind of macro unwind, right?
Why wouldn't you think that stable coins wouldn't be the answer for that, in specifically considering the fact that we can create the balance that's needed to handle that? Like there's at the highest level of governance, they want stability over everything, or at least they say they do. The stability, you can't find that stability attached to Bitcoin by itself, but it can be absolutely a large component of a basket of digital assets that also comprise of huge quantities of stable coins that are attached to real world assets and treasury bills and things that are, so it's just, to me, it's what lever do you want to pull, right? It's what does become the easiest place to find the liquidity that's needed. And I would argue that the easiest place to find liquidity is things that are liquid like Bitcoin, but don't have the volatility that Bitcoin does. Now, unless you're way in profits and you're taking profits, or reducing exposure to Bitcoin. But if your Bitcoin exposure is at 5% or 2% as an institution right now, and your goal is to get, let's say you're at 2% and your goal is to get to 5%, it seems very short-sighted, and it seems almost negligent in their planning if they are at such a cash crunch they're relying on liquidating their 2%. Like what have you, where's your cash reserves?
But
you know what I mean?
Yeah, the yen carry trade, there was a big scare early this year associated with the yen carry trade, and that was, quickly, basically wiped off the board as a concern. I just go back to, since the great financial crisis, let's call it 2009, we've been in an ongoing bull market with dips along the way that just hasn't stopped. And so whether we want to believe this or not, the greater machines that kind of run global liquidity, the greater machines that push quote unquote asset prices higher, don't have an interest in going through 2008 and 07, 08, and 09 again. Right now, there maybe different versions of unwinding that happens, but those lessons are still fairly close to the, let's call it vest, right? There aren't folks that went through the Great, Depression, 1929. All those folks are gone. But 07, 08, 09 is like our version of that. And so the structural changes that happened to all the large financial institutions were put in place. Those are still fresh. The reality associated with large financial institutions having enormous amounts of capital in reserve still is a very, very real thing. Those walls haven't come down in any meaningful way. So, seeing a quote unquote potential event like the yen carry trade, causing enormous disruption to financial markets, I think that's I don't think that's a reasonable tradable thing of scale, because I think the folks again that have their hands on the quote unquote wheel of the ship have put together sort of structures that make it very, very difficult to have an event like that. Again, if you understand the history of the great financial crisis, again and again and again and again, they were surprised by, where are the reserves? What happened here? How did this happen? Yeah. Why didn't anybody know? Somebody had to know, right? The world of finance put themselves in a position where that can't happen again. Now, history tells us that anything can happen again, but let's just call it a 15, 16-year period is it's still historically very close to that event, where everything that was changed and adjusted to not allow some huge global financial crisis to happen again. I don't think we're there.
So
I disagree a little bit. Let me give you a little counter. Go ahead, Chris. What?
Oh, I'm sorry. No, I was just saying if Andrew was saying that basically he's thinking this hyper financialization that we've had kind of keeps that from happening.
Well, hyper financialization. What does that term mean? What I would call hyper financialization is, let's just call it reserves at all the banks that matter, right? So too big to fail across the board, and then everything that we wouldn't think would be too big to fail, but would still categorized as too big to fail by all the regulators. They've been levered up in terms of capital reserves as well. So some sort of event that would cause some meaningful liquidity crisis, everybody's still got enormous amounts of battle armor on associated with being ready for something like that. That's just my answer, quote unquote, to the question.
I would disagree a little bit. I don't think it's a risk long term. Like I said, I think no one's over allocated from a global perspective. They have very small allocations in Bitcoin, so there's a very small bucket of liquidity that can be dumped on that problem. Is the point? Like, doesn't help that much. Kind of pissing on a forest fire, so to speak. I do think that there's probably some short-term risk to something like that taking place. I think there's a lot to be gained by it. I think there could be a flash crash type of an event that pushes, on Sunday night at 2 a.m. Bitcoin down to the depths of 60,000 or whatever it may be. I do think, though, it would be the greatest buying opportunity, right? It has no real correlation to Bitcoin. It has, no, in fact, Chris, you said it best earlier. There's a few types of sellers. This is the best type, forced. It means people are puking their Bitcoin out. Well, guess what? That is when you buy. That is, in my experience and in my estimation, those are why you have standing purchase orders, open orders on the books at really crazy low prices, because you never know when you're going to get a candle that is a global crash. I don't care. So what? My point to Fib would be like, yeah, it could happen. And yeah, that could be the excuse that they put behind the crash. But it's the same excuse like that all the other ones. Like, why is Bitcoin going down when we announce that we bombed Iran? Why does that have anything to do with one another? If World War III were breaking out, would you want to own some Bitcoin? Like, that would be a pretty good asset to own, considering, you might have to leave your country of origin and you might be displaced and you might need to preserve your wealth in a way that can't be confiscated. Like all those, so it's just, it's human behavior. Great. Drop the price of Bitcoin. There'll be buyers down there, I promise.
Well, it's I would suggest we should have Fibbo on the show next week to talk about Japan and why, in his words, when the yen stops being cheap, the entire global game board shifts. I want to be educated. Why? Tell me why the entire global game board shifts. I want to know versus some of the things that we dealt with at the beginning of this year that saw the S&P dip to 4,500 and then over the next 3 months go right back to the 6,000s. So that's kind of my point. I'm just looking at a history of, oh no, the worst thing in the world is about to happen, and then 2 months later nobody remembers because the market just ticks back up, and then you look up and you're like, what in the world? We're at an all-time high again. How'd that happen?
It's headlines to create fear, and that is where the money's made.
Sure,
the money's made.
I know all that. My point is that if the statements are that the Japan carry trade is coming to an end, if that happens, the entire global order of money is now going to be completely changed and shifted, and that's a problem. Well, I want to know what the thought process is behind that. I'd love
it would be interesting. I don't know the depths of it either. Fib should come on and explain it to us in a way that, it carries the weight that obviously he sees behind it. At the end of the day, it doesn't change my thesis on Bitcoin, whatever he comes on and says. Even if he says literally there's going to be $95 trillion of liquidity crunch and Bitcoin's going to suffer a huge blow because everybody's going to have to sell their Bitcoin to cover that. Great. Those are forced sellers. Those are not people that want to sell. Those are people that are being forced to sell. That is no different than me complaining about somebody getting evicted from their home if I want to buy their home. Yeah, great. Evict them. I want to buy their home. Their home's a great home. I've seen it. And the fact that they can't afford the home isn't a slight on the home. It's a slight on the fact.
Tillman says, kick the bastards out for the caffeine.
No, my point is that the fact that someone's being forced to sell an asset has no correlation to the degradation of value of the asset. It has correlation to the mismanagement or appropriation of funds in their own life, because they're being forced to sell something that they don't want to sell. And they're being forced to sell it at a loss, a gain, wherever. They're being forced to do something. When you're being forced to do something financially, it is bad. Period.
Yeah.
You just name an event where I'm being forced to do something financially, right? It's bad. Huh?
Like Tillman's saying, and I think this is the part most people miss is, when forced selling opportunities happen, I say opportunities, right? Because there's always somebody on the other side that can make something of that, right? And, so yeah, it sucks for the person who was, ahead of their skis and, hanging out over their skis and whatever, and they were forced to sell, but it creates opportunity for others who are waiting for opportunity, right? So you know, I think we have to
It
get out
actually is dumb money exiting and smart money entering, which is also good for a market.
yeah.
Which is, sorry to say that, but if you're the age of Bitcoiners being, you know, able to stay 90% vested and still live a millionaire lifestyle, they've never lived a millionaire lifestyle. There's this age-old thing that I learned at the University of Texas called the consumption function. And if you don't know what that is, it means the more money you make, the more money you spend.
Keeping up
Period.
from the Joneses. Yep.
Well, you just don't think you are. You're like, I'll never change. They say, no, bull. I promise you will. I promise you'll spend more. Your budget will go up. And so
Yep.
when your budget is growing and you're not living on ramen noodles like you used to, putting every dollar in crypto, but now you've bought your house, you got cars, you got a family, you got kids going to college, you got all these things. Those are the things that force you to sell.
Yeah.
Lifestyle, right? And when you are forced to sell, it means you're forcing yourself out of a hard asset into a soft asset, which is cash. And that's a bad move. But it also, like we all know, is you know, you only live once. It's better to experience life with some wealth and spend it than to eat ramen noodles and live by the river as a bachelor the rest of your life. Like, you know, most women aren't up for that challenge.
Why I gotta live by the river eating ramen, man?
Don't you
I
want a
gotta be
wife? Don't you have a wife, Chris?
No.
No, you don't? I didn't know that.
No.
You seem like a very
I don't
married
know.
man. Who has tamed you so well? There's
I'm just old, man. I'm just old. You
he's
know,
just all
life.
the all. Oh, that's awesome.
All right. Well, that was a great ending there. I think we can wrap it up on that. But yeah, hey guys, you know, what do y'all think? Maybe I try and get some people on here.
Yeah,
you know,
bring Fibo on. I want to go through this this thesis and juxtapose it against other, you know, liquidity issues over periods of time and how those played out and what were the immediate repercussions and then the outcomes. I think it's worth considering because this particular Japan carry trade issue has popped up a couple of times in the past 12 months. And I, you know, again, at the same time, you know, markets are the larger arbiter of concerns, real or otherwise. And so
it triggered the largest drop in the NASDAQ in 25 years. Single
yeah.
day.
Well, I mean, you know, if it's popping up again, we should see that again. I mean, today there's, you know, the NASDAQ is, you know, up 1/4 point. But you know, will that change? Does this get more serious, or is there a bigger issue here, as Fibo thinks there is, between now and next Wednesday? Be interesting to talk about and look at.
Yeah, I'll definitely see if he can. I'm not sure if he can. You know, he kind of is on his you know, at his real job during the day, which is why he's missed so many Fridays on the Market Breakdown show. But yeah, I'll see if he can do it. If not, maybe I can, you know, get somebody else. Dave, you know, Weisberg, you guys know him, or anybody else in here as well.
Dave's great. He could talk probably about it pretty well. Or you could get Fib to record it, and then we could argue behind his back, and he can't respond, which is even more.
I don't know if you guys know this, but Dave at one point worked at Solomon Brothers. I don't know if you're aware of it.
Yeah.
But, yeah.
Yeah,
Dave's a smart guy.
Dave, yeah. Love to bring him
That
in
was
there.
a smidge of sarcasm, just a smidge of sarcasm, because
well, I mean, listen,
he likes to mention that from time to time. Solomon, his time at Solomon.
Well, you know, he was there. You know, he's gonna say it, you know.
Well, if anybody understands global trade, Dave is a good. He understands those markets very, very well. So he'd be a great guy to talk about it. But he needs to represent Fib's argument. So we need to get him on the same page.
That's
right.
You know,
Dave, once you spin that top up, he'll be spinning. We won't know where this conversation will go, and we won't get a word in edgewise. But I have faith that he will bring the thunder if he comes on. So
hey, I have problem getting awarded edgewise with you two yokel locals anyway. So, you know.
That's on purpose because you'll say something like the only thing you can control is what you lose or something.
Yeah. I'm so glad you said that, and I don't have to.
You lose from the Japan yen carry trade. You know?
That's right.
It's all you can control.
The only thing you can control is how many yen you own. And,
that's right. Don't be a forced seller.
Don't be a forced seller of anything.
That's right. Of anything in life. That's right. All right. As always, thank you all so much for joining us. You know, it's great to have you guys here. We enjoy this, and hopefully you do as well. We try not to be too overly serious and structured here, in case you couldn't tell that with the beginning of the show. But
well, I think we have a new mission to Beards and Bitcoin, and it's to find you an eligible Mrs. Bitcoin, because you're too eligible, man. This is a crime against humanity. We need. Where's the Elon Musk in you? Where is the Elon? We need 5 different women. We need 20 children.
Listen, my Venezuelan fiance sent me a meme on Instagram the other day, and she said, it says, how did you find a wife that likes to cook and clean? And it's a guy sitting on the wall of the border, and he's like got a fishing pole, and it's going down there. She sent me that. She sent it. I mean, she sent it.
So are you saying you have a pass now for those jokes because you're married?
I do. A complete pass. An absolute complete pass.
All right. Hey, guys. Really appreciate y'all showing up as always, spending an hour out of your day with us.
Hey, I got one last thing to say. I have to say it. A friend of mine I played football with, a guy named Tony Jeffrey, he had a stroke. He's very young. He's 43 years old, I believe, younger than me, 42 maybe. But he was at Texas with me. He was a great wide receiver. More importantly, he's a great human being. He is kind, generous, stayed in touch with every one of his teammates, like really great guy. He's got a long road. He was uninsured and got a long road of rehabilitation in front of him. He lives in Texas. If you go to my Twitter page, I've put a link, a GoFundMe link. I've personally given some money. I will continue to give money to him. And if you have a generous bone in your body and look at philanthropic ways of giving, this couldn't go to a better person and in a real time of need. He was completely uninsured. So
give him your X account.
My X account is at TexasOL61, like Texas offensive line 61.
So there you go, guys. So make sure you step over there and do that. Help a man out. And other than that, I guess we'll be back next week. I'll see if I can wrangle us up a guest to bring on here and maybe argue Fibo's side, or who knows, talk about something anyway, right? And we can get in here and a bunch of back and forth.
Gary and Dave, and that you talk about a show, it'll be 3 hours long.
Yeah, we won't get a word in edgewise between those two guys.
They're definitely characters. All right, hey, listen, as always, remember the only thing you control is how much you lose. Please keep working on your management, especially Mr. Holloway. And we will see you guys.
I now know why you're not married. It's that phrase. If you give up on that phrase, we will find you a crypto bride.
All right, everybody. We'll see y'all next week. Thanks, guys. Take care.
See you guys.
Trading tip: always manage risk before chasing gains.